बोलायचं.
Yes.
Sir, he's Pawar sir is Honorable Vice Chancellor of Dr. D.Y. Patil Vidyapeeth, deemed to be university
Sir,
at Pimpri.
we have started already. We are on live.
Yeah, good morning. Good morning.
Yeah.
Good morning, all of you.
Good morning, all. Good morning, dear students, for this second session of skill development program. Today, we have with us Dr. M.S. Jadhav sir and Dr. N.J. Pawar, Vice Chancellor, Dr. D.Y. Patil Vidyapeeth Pune, and C.A. Pawandip Singh Duggal with us. All our eminent speakers. Welcome all the dignitaries and the students. Now I request Dr. M.S. Jadhav sir to kindly give opening remarks.
First of all, I want to congratulate the office bearers of Pune branch of WIRC of ICAI for organizing this student-oriented program for upliftment of the skill in the mind of the student. Today's respected speaker, my friend, philosopher and guide, and who is going to give an inaugural address, Professor Dr. N.J. Pawar sir, the former Vice Chancellor of Shivaji University, former HOD of Geology Department, Savitribai Phule University, and presently working as a Vice Chancellor of Dr. D.Y. Patil Vidyapeeth, deemed to be University, Pimpri, Pune. Our keynote speaker, eminent chartered accountant, and who can give us dynamic lecture today. Our branch dynamic chairman, Sri Abhishek Dhamne, our branch perfect vice chairman, C.A. Samir Ladda, good organizer, C.A. Kashinath Pathare, immediate past chairman, systematic worker, C.A. Ruta Chitale, and all other office managing committee members of Pune branch of WIRC, for whom this is a good exercise planned by them and implemented to those the students are very. All the students, very good morning and warm welcome to all. At the outset, let me thank for the branch chairman and his team for providing me an opportunity to say few words. Dear student, we are in the age of education. You are deciding your life factor, what you are going to become in your life, CA, ICWA, CS, or any competitive examination, UPSC, MPSC, etc. For that purpose, you are looking for the guidance, you are looking for some alternatives, you are looking for the various alternative solutions for your problems. But dear friend, keep in mind, problem is born itself with solution. There is no unsolved problem in the world. And accordingly, we should think, accordingly, we should provide our strength, weaknesses, opportunity, and threats in that angle. Therefore, my submission to each and everybody that you should evaluate your strength, you should evaluate your opportunities, you should evaluate your weaknesses, and you should evaluate your threats. That your analysis will help you to decide the life cycle, define the life motto, decide the life path for your best career. And CA is the one of the best career for your life. And for that purpose, Institute of Chartered Accountant of India, Pune branch has organized this skill development program for this week. 7 sessions will be delivered by the various eminent speaker during this period. And dear student, you should learn by heart. Take the note of this, and accordingly, you decide what should be your path of life. And then only you be perfect. You should be hard worker, and you should be devoted to your job. This is my request. For this purpose, I will not speak more than this, because Honorable Vice Chancellor, keynote speaker, will speak about very much now. Over to Samir Ladda ji. Thank you.
Thank you, M.S. Jadhav sir, for your guidance and opening remarks. You are always there to help us for Pune branch for conducting such a wonderful sessions, and it is always helpful to all the students. I sincerely thank to you for coordinating such a wonderful series for students. Now it's my great pleasure to introduce today's our speaker, Professor Dr. N.J. Pawar, a very senior professor. By qualification, he has completed BSc and MSc in geology, and also he has completed PhD in geology in 1985. He was recipient of the Young Scientist Award in 1984 instituted by Indian Science Congress Association for his research works. He has contributed immensely to the fields of higher education, teaching, and research, especially in norms of the specialization in hydrology and environmental geochemistry. Uh, at University of Pune, he has appointed as he has worked as a head of the Department of Geology, and then he has appointed as Vice Chancellor of Shivaji University, Kolhapur, during February 10 to February 15. As a Vice Chancellor of Shivaji University, Kolhapur, Professor Pawar was instrumental in implementing semester system at undergraduate level and choice-based credit system at postgraduate level in 2010, and motivated faculty for up graduation in teaching skills and research. Its efforts to celebrate Golden Jubilee of the university were supported generously by the government of Maharashtra by providing funds about 50 crores and sanctioning 113 teaching and administrative positions. As a result of this, H index of the university rose from 36 in 2010 to 55 in 2015, indicating excellent research output at international level. As a result of research work of all these initiatives of Dr. Pawar Sir, Shivaji University for the first time received A grade from NAC with highest CGP, that is 3.16 amongst all the universities in the state of Maharashtra at that time. He has successfully guided the PhD research of 18 PhD students in the geology and environmental science departments, published over 85 research papers, edited 4 research volumes, 2 abstract volumes, and translated 2 books on popularization of science, besides several popular articles. In a recognition of his research work, he has elected as a Fellow of Maharashtra Academy of Science, Fellow of the Geological Science Society of India, Life Member Association of Hydrologists of India, Executive and Life Member Gondwana Geological Society, Life Member of Indian Mineralogical Society and Indian Geotechnical Society. Professor Pawar has made important contribution to national level research program launched by the Department of Science and Technology, Government of India. He was active researcher in the nationwide scheme of science of shallow subsurface developed by DST Government of India. Through this research plan, as a principal investigator, Dr. Pawar received funds for the development of geology for working in Ankaleshwar oil field and industrial area. Dr. Pawar believes strongly that it is a prime importance to share the knowledge and information with the local communities so that informed choice and decisions can be made for social good. Dr. Pawar sir, it is our privilege to have you as a speaker for today's sessions. I again give my sincere thanks on behalf of Pune branch to you, and I request kindly share your wisdom of knowledge to our students. Over to you, Dr. Pawar sir.
Well, good morning to all of you. At the outset, let me take the opportunity of thanking Dr. M.S. Jadhavji for giving me an opportunity to be here with you all this particular morning. He's my former colleague and very good friend for last many years, and I could not resist his invitation. At the same time, there are other office bearers. Mr. Laddaji is there, Mr. Damne is there, then Pawandeep Singh Duggalji is there, Kashinath Pathare is there, all of you, and my dear student friends. Let me first take the opportunity of thanking all the organizers of WIRC, of ICAI Pune, and providing me an opportunity to be with the students of commerce fraternity. And this particular opportunity will certainly be used by me in terms of reaching out to all the students, in terms of, I know that students come to a particular branch with a lot of aspirations and hopes. And these dreams, they try to fulfill by way of making tremendous efforts. And these efforts at some point of time certainly yield the success which makes them particularly very happy in their lives. I must wish all the success to all the students who have opted for the branch of commerce and management. And I'm sure that with their efforts and with, I would say, more like with their scholarly effort, they will certainly make their parents feel proud. They will certainly make themselves proud of their own achievements. Let me try to touch upon the topic of today's deliberations and discussions. I think this particular workshop is organized towards the financial literacy and the skill development, which is essential in today's world. We are all aware that we have gone through a different kind of a system. Till 1990, the Indian financial system was in a mixed mode, neither capitalistic nor socialistic, and therefore it was mixed mode of financial system that we followed. And therefore, this particular system has inherent certain limitations of its own. And therefore, we had to open up our economy. And by 1990, we opened our economy. And therefore, we became more competitive nation in terms of all sectors in which we are working as the Indian system. And therefore, you will see that across the globe, India has received a recognition in a particular sector where wealth is being generated by the youth of this particular country. And the recognition that the country has got today is in the service sector. And therefore, service sector today contributes a lot of wealth generation to the nation. And therefore, we have to take into consideration this aspect of our economy. If you really look at our very important document, which is the Constitution of India, and if you really browse through the preamble of the Constitution of India, it has 86 words in it. And there are three typical important words which we have to see that they are the foundation of this particular document. They are, number one is, I would say that brotherhood is important, justice is important, and inclusion is important. All three are the foundation of this. When we look at the three important aspects, particularly in terms of fulfillment of this particular document, then we will see that the Indian society has tried to come up with respect to three aspects. And they are in terms of equity, if I say, and the government is trying its level best in terms of providing equity. Number one is social, which we are trying, political also we are trying, and therefore various systems are in place. And third important aspect is a financial equity, where there is nothing as such we have been able to do much. And therefore, we need to really pay serious attention to this particular document, which is a Constitution of India, and where in the preamble itself, it is said that financial equity is a very essential for the Indian society. Today, if we see that there is too much of a diversity, and nearly 2/3 of our population is not financially literate, and therefore literacy, particularly in the financial aspects, is very poor in a country like India. And therefore, government has floated certain kinds of schemes. Jan Dhan Yojana was in that particular direction. And therefore, we see the success of this particular scheme to some extent. But certainly, if we see across India, because 65% of the population is financially illiterate, then we find that even within the country, there's too much of a diversity in terms of financial literacy. Some states, like advanced states like India, Maharashtra, Gujarat, Tamil Nadu, Karnataka, Andhra, they will have better kind of a financial literacy in terms of knowing what all schemes are available and how to plan about it and everything, but it is not so with many other states. And therefore, let's, as a student of commerce, try to understand the very basic Indian financial system framework, what is the structure of the Indian financial system that needs to be understood largely by the students. Because today, on the background of COVID-19 pandemic, every country is suffering a lot of losses to its own economies. No matter whether it is China or it is US or Europe or any other country, but all of them, they are finding it difficult to manage the financial resources because of the lockdown. And therefore, under such circumstances, we have to take a review of our own system and see how best we can look forward in terms of knowing its intricacies. For example, if we look at our own financial system, we have a lot of structure which is governed for, four-pillar structure which is governed in India, which comes under the Ministry of Finance. One of them is RBI and banking system. Second one is the SEBI and other thing. IRDA is there, and other systems like NABARD and others are there. So those kinds of systems are functional in India, and therefore we have to look at how do they function. As a students, we must have a curiosity to look at how the banking system performs. What are the skills needed for it? As a commerce graduate, if you really go for accounting purpose, what is the basic technical skill that is needed by you as a student? We know that Tally has become a very popular at the graduate level, and therefore we are actually making compulsory to have Tally as a part of the curriculum, and therefore every college is trying to teach how to make use of Tally software. Similarly, if you see today, there are a lot of students, those who are migrating abroad, and lot of students, those who are working also abroad. And therefore, there is also demand for those persons, those who know financial systems, how it works globally, how it works within India, and therefore you have to have a knowledge of international financial reference standards, how globally financial system operates, and how it actually integrates with the Indian financial reference standards. And if you know both of them, then you will come to know that yes, there is some kind of a mechanism by which these systems are operating. We need to have insight about these systems, and therefore accordingly you can look at it. For example, when I go to banks, and particularly because my sons are working abroad, I find so many difficulties in terms of the boys which are working abroad that they are facing, because the notifications are issued by the RBI, and these notifications will be issued to different banks, and there is something very typical structure that exists. We have a provision as an Indian to have investments made, because we are largely a society where we try to save. We have a saving kind of economy, and therefore little bit amount every month we will try to save. There could be recurring deposits, there could be fixed deposits, and number of schemes that we operate. And these kinds of systems are prevailing in India. I was under the impression that the similar things are also available for NRIs, those who are working abroad. And when I look at it, there is so much of bureaucratic procedures involved into it. There is something known as the FATCA. FATCA is some Foreign Exchange Act which is operational for the US citizens, those who are NRIs working in US. And it is same in the Europe, which is known as a CRS. How do they operate? They operate on a only long-term sale. If somebody wants to invest in India or transfer the amount from in terms of euro or dollars to his own account, he will have NRE or NRO account, NRE account essentially. And then you will find that he cannot make FD for a short duration, neither 30 days, not 45 days, nothing which we have as the facility here. And therefore, there's a discrepancy in this particular system. They will have to invest not less than 365 days minimum. That means 1 year investment they have to make, and they do not have the provision of investing for a shorter duration of time. I don't know, but I have been trying to look at this particular issue, which is a discrimination amongst the citizens. They are also fellow Indians, we are also fellow Indians, but the schemes are different for different people. And therefore, how we can actually set aside these kinds of issues, that also we need to look at it. The other important aspect is how best the students can try to understand different kinds of systems which are functional around. If we take into consideration, say for example, financial planning at individual level, at family level, and at other levels, then you find that we try to look at what is the source of income. How much is the amount that is coming to us? How much is the expenditure that is going to be incurred? How much is the amount that we are going to save as an individual for the family? And what is the mechanism of saving? And therefore, there are various schemes for saving also, whether you want to put it in the banks, whether you want to go for any other schemes which are available in the market, and that could be systematic investment plan or which are unit linked or market linked. And therefore, there are various ways in which. But basically, as a student, we have to see how in practical these kinds of schemes work. We have a lot of theory in our curriculum. We understand thoroughly, but at the same time, the connect between the practical life and the theory is missing. And therefore, this particular missing or gap between the two can be matched with the imparting of a skill. And with these skills, it is possible to fill this particular gap so that our graduate will become more competent in terms of fulfilling the requirements of various sectors. Maybe it is the banking sector, maybe it is any other sector, but they will be able to fulfill these requirements of different sectors. I'm sure that in the workshop, all these kinds of details from the experts will certainly be delivered to you, and all the students will certainly try to take the advantage of all these aspects. I know that this workshop, there are a lot of experts, those who will be participating, and they will be enlightening the students. And with this, the students will certainly try to understand the various schemes that are available in the commerce curriculum and how best the skills related to those kinds of schemes can also be acquired through different mechanisms. Friends, it is indeed a great pleasure to have this kind of activity which is implemented by WIRC and of ICAI. I congratulate all the organizers for having organized this particular event for the benefit of the students. I just want, before I close, I would like to highlight two important aspects about two books which are published. One of the books published is by American author. It is known as a Future of the Power, which is written by American author whose name is Nye, N-Y-E. And he says that the global power will be shared between three countries by 2004-5. The reason being, he gives example of unipolar world. Currently, superpower is US. Before that, it was a bipolar world. And by 2004-5, the world will become tripolar world, wherein the power will be shared by India, China, and US together, and 35% of the India in terms of power. Now, this power is not only military power, but it is also economic power. And therefore, this power will be generated none other than the students and youth of this particular country. And therefore, if the students start dreaming about India becomes a superpower, they will have to work hard. They will have to make sure that there are various ways by which the wealth of the country is generated. What we are lagging behind is in terms of manufacturing sector, where the growth is almost halted. And therefore, along with the service sector, where we have made impact globally, we also have to ensure that we have to have the manufacturing sector and growth of the manufacturing sector ensured. Although the government is making all possible efforts, it is predicted that because of the COVID-19, the situation now will improve, where large number of startups will take place by the youth of this particular country, and then certainly they will succeed in terms of making this particular country one of the important components of the global power by 2004-5. I'm sure that the dream of Indian society will come true through the efforts that will be made by our youth. There is another book by Chetan Bhagat, and that book is by that book addresses And the title of the book is What Young India Wants. And he says that the America becomes superpower because of the leaders, those who taught the youth of the country in 1960s to dream, and their dream was about the great American dream. Similarly, we also have to ensure as a passing out generation to encourage our youth in terms of asking them to dream, which is the great Indian dream. And certainly if they start working in that direction, by 2004-5, India will become a power, global power, who will be sharing equal power with US and China. And that is what is the dream which will come true. I'm sure that the students of this country, youth of this country is capable, that is a talented youth, and therefore I wish them all the success to come out with this dream to come true. I thank again the organizers. I thank Dr. M.S. Jadhav for giving me an opportunity to be here with you all. Thank you very much, Mariano. I wish all the success to this particular workshop. Thank you.
Thank you, Dr. Pawar sir, for your keynote address and guidance to our students. We will like to get associate with you in future also for our branch. And thank you very much. Now I will introduce our today's another speaker, CA Praveendeep Duggal. Good morning, sir.
Good morning. So kindly excuse me, I will have to participate in another program. So thank you very much, all
Yes,
of
thank
you.
you.
It was
Thank you,
pleasure
sir.
meeting you all.
Thank you, sir.
Thank you.
Thank you very much.
Thank you.
We have with our today's faculty Pawandeep Duggal sir. By qualification, he is a CA, MCOM. He has completed NET, and at present he is pursuing for PhD. He has experience in industry 3 years, academic experience of 13 years. Worked as a credit manager at Standard Chartered Bank and ICICI Bank. Presently associated as a faculty at MIT, at University of Loni and PIBM Pirangut, and also written a book on finance for PG students. Welcome, Duggal sir, and it's over to you. Kindly give your knowledge of wisdom to our students.
Sure, thank you, sir. So, good morning, all the students and all the respected members of the ICAI and the faculties from especially Pawar sir, Jadhav sir. So, myself, I am CA Pawandeep Duggal. I completed CA in 2003. And since then, I have been into the service industry where I started my career as a credit analyst in the banking sector. Now, being a chartered accountant, you will wonder how it is possible, because chartered accountant is only supposed to do auditing and taxation, and he's only supposed to do the accounting part and the laws which are there. But these days, CA is not just restricted to only accounts, taxation, and laws, but also venturing out into variety of new spheres of commerce, which include banking, which include the fintech, which is financial technologies, which also include a lot of new areas, especially venture capital, private equity, then structuring, restructuring of debt profile, and all the other new things which are coming up in the financial sector. So this is a brief background about myself. I have exposure in corporate banking. I have worked in as a credit analyst, so I used to do analysis of financial statements and then sanctioning of the loan, disbursement, post disbursement monitoring. All these are the part of whatever I used to work in as a part of my banking experience. Now, as students, you have to realize that it is very important to decide career at early stages of your graduation, so that you are able to take an informed choice, and then you stick to that choice for the coming years and then become specialist in the area. So for example, if you choose taxation, then you can choose to become expert in taxation. You can go ahead for practice in taxation. If you choose to become expert in accounting, then you can work in the accounting area. You can work as a, you can complete the CA, then you can do a lot of work in the in the finalization of accounts and so on. And if you choose, let's say, apart from tax and account, if you choose, let's say, auditing, then also there is a great scope for working. So it is very important that you decide which area you want to go and accordingly take decision for completion of any particular course, degree, or any kind of a certification which is required for that. Now today what we will do is we will look at the basics of banking, right? And what are the features? What are the features of banks in India? So what is a bank? We have to start from that question. What is a bank? Why do we need a bank? That is the first question which comes to the mind. Now, basically, if we do not have, we have to always think that, what happens if we do not have the bank, right? So if we don't have a bank, the first thing which is going to happen is, how are you going to, where are you going to save the money? Are you going to keep it in your house, in the lockers, or are you going to keep it somewhere where you feel it is safe? So first thing is deposits, right? We have to deposit the money in a safe institution. So banking provides intermediation. Banking provides the platform where the depositors can save their earnings in the form of savings deposits, fixed deposits, and recurring deposits. That is the first very important function of a bank, to enable the depositors to deposit and save. So banking helps in saving function. Saving and investment are two wheels of any economy. Okay, people save money, as you may have studied in economics, the circular flow of income, households and businesses and government. So the money which is saved by the households and the businesses actually is invested, and invested by means of intermediation like banks, insurance companies, and there are mutual funds. So all these are investment vehicles which help the public to save the money and invest it into various profitable channels. Like for example, you deposit the money with the bank, and that funds which are there, bank gives you interest on that, but bank also gives loan from your money to the people who are needy or the business who is requiring the funds. So what is a bank? Is a intermediation between the saver and the user. User, you may not be aware, it could be a retail investor, retail borrower, it could be a corporate borrower, it could be a company which could be user of the funds which are saved by the depositors. So the funds, a very important function is accepting of deposits and granting of loans. So we call a bank is a financial institution that accepts deposit for the purpose of lending, right? Accept deposit from the surplus unit and lends to the deficit or the needy units who require the funds. And then obviously the bank is going to charge interest from the borrowers, and that interest is going to be higher as compared to the interest which is paid to the depositors, right? So now this is the meaning of bank and why we require bank. And apart from the savings, what are the other reasons that we require a bank? So one of the important reason is that we require bank for payment services. Today you may be hearing about so many payment services like Paytm, Google Pay, right? Now these are coming in the 5-6 years, these companies have been growing. But earlier, what was the payment mechanism? The most common payment mechanism was the check, right? The check was the most common. It is a negotiable instrument. Negotiable means it is something which can be signed and delivered, and then the payment is deemed to be complete. So first is that the banks were the only channel whereby people used to make their payments, and a lot of transactions used to happen through the bank only. Even today, you see, even today, a lot of foreign exchange transactions are happening through the banks who are authorized by the Reserve Bank of India to deal in the foreign exchange like US dollars, euros, British pounds, and other foreign currencies. So the banks have always been there. They are always going to remain there, right? And they are going to be an important ingredient of the financial system of any country, of any economy. And now, it is very important today, that students should appreciate and understand that banking provides one of the most, number of jobs, right? According to the industry estimates, the banking jobs are whether you take the public sector, you take the private sector, or you take the foreign banks, they provide the highest amount of jobs to the candidates who are completing their MBA or CA or any financial course. So this is the importance of today's session, to understand what is a bank, what are the different products, what are the different departments in a bank, and how do the departments, how do these things help in our economic development of the country, right? So let us first look at what exactly, how does a bank basically cater to the requirements of the economy. So basically, you are all aware about the Indian economy, right? First, the Indian economy is agricultural driven, right? It is predominantly driven by agriculture, with a large population and a wide diversity, right? So we have a I think around majority of the population, 65 to 70%, which is dependent on the agriculture. That is the backbone of the Indian economy. Even today, we are talking about services, we are talking about industrialization, but the fact remains that agriculture has been the backbone and will continue to remain the backbone of the Indian economy, right? So once we know that agriculture is the economy, we need institute like NABARD. NABARD is National Agricultural Bank for rural development, right? So this is the one apex body for the agricultural banking in India. Then second is industry. Which industry we are talking? We are talking about the manufacturing industry. Now, manufacturing industry is another a sector which contributes a very significant amount to the GDP of our country, right? Although today manufacturing is is not at the very high level, the index, and it's not working because of the recent issues, but it has always been a very important contributor. So industry needs finance. Industry needs finance, agriculture needs finance, and this finance is basically provided by the banks. Some are specialized banks, some are generic and commercial banks, like your your commercial banks you're already aware, like ICICI, Punjab and National, all these are. So basically, we have to understand the different segments of the bank as well, right? So now, having understood that we require the banks for this agriculture, we require the banks for the industry, we require for manufacturing, right? And then there are different requirements. Now the second question which comes, what is the how does the bank meet these requirements? The requirements are very high, right? Now, is the bank going to give its own funds? No, the bank doesn't have its own funds. The bank derives the funds from the depositors like you and me. We deposit the money, we save the money, and the money is so now the next question comes, what are the different types of deposits? The first very primary type of deposit is the savings bank account. You may all have heard is a savings account. So people who save their money may feel insecure that if the money is saved and it is kept in the house, it is susceptible to theft, it is at the risk of being stolen, or it is at the risk of being used abruptly. So what people do is people save the money in the bank. Now today, the bank is offering interest on deposits, on saving deposits, at the rate of 3.5 to 4 to 5%. Anywhere between 3.5 to 5% is the interest rate offered by the various commercial and the scheduled and the non-scheduled banks. So now, why they offer you 3.5? Because there is some incentive for the depositor. Rather than keeping the money idle, you will get some interest on your savings. Now, people are, the majority of the people, they save their money in the savings deposit account. They get the checkbook, they get the ATM card, then they can use the money. Whenever they want, they can withdraw the cash from the ATM, or whenever they have money, they can deposit the cash in their bank account. So that is the first very important. The savings is a very, very big amount, or a very, very big proportion of the deposit which is gathered by the banks for the purpose of lending to the borrowers. That is one important. Second aspect, fixed deposits. Now, what are the fixed deposits? The fixed deposits are the deposits which are for the tenure of more than let's say, 6 months or 1 year or 3 years, depending upon the time the depositor wants to save. So someone may say that I don't want to use the money for, let's say, 3 years. So he can create a fixed deposit, right? It will be giving him an interest rate of 7 to 8% per annum, right? So it is an incentive. It is giving you double as compared to savings deposits. So the fixed deposit, now from the angle of the bank, understand this is very advantageous. Why? Because the bank will take the money for 3 years. Okay, so it is assured that up to 3 years, the depositor is not going to ask for the money, right? So from this money, the bank can give short-term loans, which are 1 year, 1.5 year, 6 months. All those loans can be given by the bank, right? So that is how the bank manages its assets and liabilities. Basically, a deposit, is a liability for the bank, because the bank has to repay the deposit whenever the depositor wants the money. And loan is an asset for the bank, because the loan helps the bank to recover the money after certain. So basically, whatever is receivable is an asset, whatever is payable is a liability. Deposits are payable by banks and loans are recoverable by banks. So loans are asset for the bank and deposits are liability for the bank. It is very important. Bank is paying depositors interest and bank is charging the interest to the borrowers. So this is the second deposit, which is the fixed deposit. Now third is the recurring deposit. Recurring deposit is similar to the fixed deposit, where where the same amount of money is deposited for a particular period of time, let's say for 1 year, or every month you deposit, or every week you deposit, depending upon the terms of the deposit, right? So bank gets the money by way of deposits and then it lends. Now understand, where does the bank lend, right? So again, the bank can lend to either an individual or a partnership firm, right, or to a company. So basically, you can the bank can give to the individual. Now first understand what are the different types of individual or retail loans. When we talk about individual, we talk about retail loans. So what are the different types of retail loan? Car loan is taken by a retail, home loan, education loan. All these are examples of your consumer durable loans. All these are examples of retail loans which are taken by individual for the requirements which they have, which are particular for their, suppose someone want to buy, let's say, a house, so he can go for a home loan. Okay, someone has already a house, but he want to buy let's say a washing machine or some kind of a consumer durable, then he can go for consumer durable loan. So it all depends upon what are the requirements of the individual, and accordingly individuals can go for the retail loans. Now second comes, second is the concept of corporate loans. Okay, now corporate loans, when we say, basically, there are different types of corporate. We have to first segregate the corporates according to their size, right? So the smallest is a small and medium enterprise, or MSME we call these days. MSMEs are micro, small and medium enterprises, which are, the driving force. You may have heard about the recent impetus given by the finance minister, Shrimati Nirmala Sitharaman, okay, who has because of the COVID, the MSME sector had a lot of issues, particularly regarding their production, regarding their labor turnover, and there are so many issues with their loans. They couldn't repay because their operations were stopped, right? And MSMEs are very crucial in integrating any economic system within the society, because they are contributing to 40% of exports from India. And how many people are employed? Approximately 60 million. Okay, so this is a very big amount of people which are working in the MSMEs. So they need financing. They need financing for meeting their requirements, for meeting every stage, right from the time the MSME is starting the operation till the time of the finished good is ready. They require the funding. They require funding at low cost, because they are like a small child who is to be nurtured and nourished properly. If the child is not nourished properly, then he cannot become a healthy and strong individual. So MSME is similar to a child who requires adequate funding to meet needs at every stage of the life cycle. right? And therefore the role of the bank become very critical. Okay, this is a business loan which is to be provided, and then for this purpose the MSME has to open an account which is known as current account, right? So current account, like as I said, savings account is opened by individual investor, FD is also opened by the individual investor, and the recurring deposit is also opened by the individual. So current account is opened by the business units, which include the companies, the small and medium enterprises, and the micro, small and medium enterprises, which are also we just discussed, right? Now, what are the different types of loans, okay, that they take, right? Very important to understand that they either they take short-term loan, which is said as a working capital loan, or they go for a long-term loan, which is like a term loan. Okay, so long-term loan, everyone knows, is a loan which is for a period of more than 3 years up to 5 years. Short-term loan is a loan which is for a period of up to 1 year, which is also known as working capital loan, right? So these are the typical requirements of MSMEs, which are micro, medium, and small enterprises. Then there are large companies like Tata's and Reliance, which also require, they don't come under MSME, but they do require fund for different reasons. For example, exports, for imports, they have to also take the loans for that particular purpose. So coming back to the point, deposits we have discussed. What are the liabilities? Also we have the assets also we have discussed, right? So these are the main functions that the bank provides. One is accepting of the deposits, and second is granting of the loans for the purpose of helping the various sectors which are there in the. Now when we talk about the sectors, we also talk about the manufacturing as well as the service sector, right? We provide the bank provide the funding to the both types of sectors, right? So moving ahead now, right? What are the different corporate bank? How does a bank look like? What are the different structures? So first we have the commercial banks, right? Commercial banks include the Bank of India and its associates. Now State Bank of India, and when I say associates, it means the State Bank of Hyderabad, the State Bank of Travancore, State Bank of Mysore, all these associates of State Bank. Some are already merged with the SBI, and the others are in the process of mergers. So whatever are the pending SBI entities, associates, and the State Bank, they are the first commercial bank, very you can say large commercial bank, largest rather I must say in India is SBI, right? Then we have the public sector banks. The public sector banks include the banks like Bank of Baroda. Then we have Punjab National Bank. All these are the public sector. Private sector banks, example ICICI, HDFC Bank, all these DCB, Axis Bank are private sector. Foreign banks like Standard Chartered Bank. Then we have Citibank and Barclays, HSBC, and so on, right? These are the first classification which we talk about, which is the commercial banks. Now, if you look at the commercial bank, we can also draw a chart, right? We can draw a chart whereby we can create a structure, right? For example, first is commercial, then we have the public sector banks, right? And then we have the other financial institutions. So coming back to the next now, we have the institutional or the which is also known as the industrial finance branches, like the IFCI, Industrial Finance Corporation of India. That is an institutional bank. Then we have the State Finance Corporation, which are different states have their own financial corporation, like Maharashtra State Financial Corporation, and so on. And then we have the other financial institution like mutual funds and non-banking financial company. Very important, non-banking financial company is a recently they have been gained a lot of prominence because the bank cannot satisfy each and every need of the depositors. So the non-banking financial companies, there are some 13 classifications of NBFCs. They have recently become very popular as they are known for targeted supply services. They supply the funds for, let's say, equipment finance company is one such example. Let's say Tata Mahindra Finance. These are dealing with their own machineries and equipments. Then we have the gold loan companies like Manappuram Muthoot Finance, right? So the different companies are there which actually have taken over the banks in their specified areas. They have very less requirements. They have very less documentation as banks, because the bank have to follow the guidelines which are laid down by the Reserve Bank of India, and these guidelines are they are tremendous guidelines, means this documentation, and because of these documentations, microfinance is also one area, where the NBFCs are very, very popular, right? So these are the, some of the benefits which are provided by the banks and the NBFCs. Yes. So we have to look at the structure of the banks in India, which is the apex body is the Central Bank of India, which is the RBI, the Reserve Bank of India, which is the apex body in our country. The RBI has to control various commercial banks and the public sector banks, as well as the private and the foreign banks in India, because banking a function which needs to be regulated, and if it is not regulated, the depositors will lose their money which they have saved. Okay, and for that purpose, the government and the Ministry of Finance has created the RBI, the Reserve Bank of India, which deals with various laws and various provisions for the purpose of regulation of the banks in India, their services, how much they can, at what rate lend, at what rate they can accept the deposits, and there are so many other things which the RBI has to deal, which we will look separately, the functions of the RBI. So yeah, now coming back to the RBI, right? Now the first function of the RBI, the Reserve Bank of India, is that it is the bank, it is the father of all the banks, right? It basically regulates the banks, and it also provides various guidelines, right? It provides various guidelines for the banks to operate. For example, one of the very prominent guidelines is the requirement of cash reserve ratio, also known as CRR. CRR is the some kind of a ratio or the reserve is the all banks have to keep with the RBI. All the banks have to maintain the CRR with the RBI of certain percentage of their deposits. So if deposits are 100, then let's say 10% or 5% of the deposit of 100 will have to be maintained with the RBI as cash reserve ratio, which is known as CRR. Then the next is the statutory liquidity ratio, the SLR, which is also another deposit or another kind of a reserve which the bank has to maintain with the RBI. Right now, this is not in the cash, but it is in the form of gold and bonds. Okay, so RBI first regulates the bank by asking them to keep the deposit amount of deposit with the, all the commercial banks should keep some deposit with the RBI. That is one. Second is, what happens if any bank faces liquidation? Now recently, Yes Bank. What was the case with Yes Bank? Yes Bank had a crisis, and because of that crisis, the depositors started getting scared that we are unable to, we may not get back our money. So this was a very big fear. You may have read in the papers that Yes Bank had almost filed for liquidation, but that time the RBI intervened and the RBI took over and started, dealing with the assets of the bank and ensuring that the depositors' money will not be lost. Right. So it also gives comfort to the depositors. It as a banker to the banks as well as banker to the government. Now government also needs money. So the government, where the government will go if they require funds, they will approach the RBI. The RBI will issue bonds on behalf of the government, which is known as treasury bills, okay, or sovereign government bonds, by which the funds will be raised by the government and that will be used for the purpose of development of the nation, development of infrastructure, development of agriculture, and there are so many other priorities on the national list. Okay. Then the next is the RBI also issue currency notes. As you have already seen that the currency notes which we are using are all issued by the RBI, which is the Reserve Bank of India. Now, commercial banks also we have discussed. RBI also we have discussed. We also discussed the different types of deposits, and we have discussed the different type of loans. Now, let us look at the different type of corporate loans, which I just mentioned briefly. The first is the working capital loan. Now, first, let us understand what is the meaning of working capital. Working capital is the money required for the day-to-day work of an organization. Okay, when you say the day-to-day working, our organization need to pay salary to the workers or wages to the workers, pay salary to the employees. It needs to buy raw materials. It needs to pay to the suppliers. And also there are so many other things which organization has to do. It has to spend the money on day-to-day. You forget about the land and building and the property, plant, equipment. But if you look at the short-term expenses, they are very huge. And these expenses constitute what is known as working capital. Right. Now, for working capital, also the bank provide loans. The bank gives loans for the purpose of purchasing of raw material, especially if you want to export if you got export order, the bank will support you by providing you something known as pre-shipment finance. It is also known as packing credit. Packing credit means up to the point of packing, whatever expenses are incurred, the bank is going to fund or finance all those expenses. So packing credit, pre-shipment, bank is going to give you money. Then after the goods have been shipped to the country of destination, again the lot of other work with a lot of formalities which are required for the legal compliances and other things. So that is a working capital which is short term. Export cannot take a very long time. It will have to be completed within the 6 months. It has to be completed within the 180 days or maximum a year or 9 months, right? For that purpose, the bank gives working capital loan. And another that is I just discussed in export, but if you look at the major source in the Indian context, one is which is known as the overdraft. What is overdraft? Overdraft means the amount which is overdrawn from your current account. Okay. So for customers who are of a very good reputation, okay, their current account balance can, the bank says that if your current account balance goes into negative, which means last it can become zero, but we will give you negative. So it can also show minus 2 crore rupees. If it shows minus 2 crore, that is the limit of overdraft. Overdraft means drawing against your current account and drawing up to the maximum of 2 crore. That is, let's say, the limit which is given to you by the bank. Some company can have overdraft limit of, let's say, a big company like Reliance could have in millions and billions of dollars. So that is overdraft facility which is granted by the banks to the companies depending upon their credit standing. So overdraft is one of the very important types of working capital which is provided for the selected customers of the bank. And the next is also known as bill discounting. Bill discounting or invoice discounting. In India, we also, the bills of exchange are also called as hundis, right? So what happens, for example, let's say you, a company sold the goods to the customer and the customer signed the bill of exchange, okay, and said that I will pay you after 3 months, right? Now what will happen? The 3 months money is blocked, right? If you would have sold for cash, you would have, the company would have got the full money instantly. But by selling it for credit for 3 months, the company has to wait. So rather than waiting, what company does is the company takes the bill to the bank and says that you discount it. Discount means if the bill is for 100 rupees, the bank will pay the company upfront 85 or 80 rupees, right? And after 3 months, when the customer pays back, then the remaining 10 rupees will be also released, right? But what is the advantage? That the company can instantly get the money by selling the invoices or by discounting the invoices. This is known as bill discounting or invoice discounting. So that is also one service which is provided by the bank, which comes under the short term or the working capital loans. Then the third, which is there under the working capital, is the cash credit. Cash credit is also a type of loan which is taken for the purpose of your short term requirements only, especially for the purpose of the raw materials and their conversion into the finished goods. You require the cash credit, right? So these are the three, but the only thing what differs in each of the three types of loans is the security creation. What will happen, if you take this loan, you have to give some kind of a security to the bank. And again, you have to understand that security creation depends upon whether it is a short term or a long term loan. In the case of short term loan, the security is created by way of pledge or hypothecation, whereas in the case of long term loan, the security is created by way of mortgage of the property or the plant or the equipment that is to be mortgaged in the favor of the bank, right? So again, there are different, we have to go deeper and deeper to understand the loan sanctioning process for the purpose of, understanding the deeper insights, which I don't think, we will be able to do today, because you have to look at the other aspects of the bank. So we have covered the deposits, we have covered the loans, right? And the next thing what now we are going to look at is the different types of other services which a bank provides. Now, what are these other services? Now, suppose if if some family has got ornaments, gold, right? Now, again, the banker provides a locker facility, right? The locker facility could be provided, by the bank depending upon the size of the locker, how much you have to keep the gold or jewelry in your locker. So accordingly, the banks provide this facility whereby the valuable ornaments can be kept in the lockers. Many people who are working abroad, but they are NRIs, do take the locker facility because they keep their money in the safe deposit lockers, right? So this is one of the services which is provided, for which the banks charge obviously, but then their valuable ornaments, jewelry is considered to be very safe in the bank lockers. Next is the services which is also provided by the bank is issue of demand draft. Okay, many times you may have come across a situation where some institute or some university wants DD. Commonly we call it as a DD, right? Now we have to open a DD. So again, you have to go to the bank, pay the money, deposit the money, and then the bank will charge the commission on deposit and demand draft, and then they will issue a demand draft. Many times for payment of the fees, school fees or college fees or exam fees, it is required that DD is one of the requirements, nationalized bank. Okay, so students must be aware about the process, how to apply for a DD and how the DD is issued. There is another facility which is provided by the bank. Another now utility service offered by the bank is the payment of the bills. So whatever your monthly bills, your electricity charges, etc., you can issue a standing instruction to the bank, and the bank will auto debit your expenses every month when they get the bills. So that is another facility which can be used by the which is provided by the bank. So these are the some of the deposits, these are some of the the loans, and then there are some of the other services which are provided by the banks in India. Now, what about the, what about categories of the banks? I discussed, one was the retail, the commercial banks, one was the public sector units, one was the foreign banks, and the other was, the private banks. Now, what are the different functions also we have discussed, apart from, the lending and the deposits, and also we have seen the different types of the banks, right? Now, where are the careers in the bank? Okay, students might be interested that if I want to apply, if I want to go for a banking job, then what should I do, right? What should be my approach for getting the banking job, right? Now, this question is, a question which is very common, comes to the minds of the college students, that if I want to make a career, how should I approach a banking job? Now, in India, we have the Institute of Banking Personnel Selection, is known as the IBPS. IBPS is an is a body which regulates the examinations for the purpose of entrance to the different types of, the public sector banks, especially like the Punjab National Bank, Allahabad Bank. All these vacancies are advertised by the banks, and they are having one common entrance known as a IBPS, Institute of Banking Personnel Selection. So that is it involves aptitude and other areas which student has to prepare. Okay, that is one way of entering in the job, applying for the job in the banking sector. Another is that many private institutes also, many colleges, they have tie up with the banks, where their students who do MBA course, they can get jobs. For example, in India, we have the IIMs, which is Indian Institute of Management, where a lot of students who complete their postgraduate studies, then they are given the placement by the institute, which is also provided in the different banking sectors as well, banks also. Then we have the NIBM. You have all heard about the National Institute of Bank Management. They provide courses related to banking. To complete those courses, then they get the jobs in that particular segment, which is the banks. So this is another area what you should know, that how, and where are the opportunities. Now, when we talk about the specific roles, what are the different roles in the banks? First is, we have to understand which segment of banking you are talking. Let's say if you're talking about retail bank, then there's a branch. Okay, there is a branch banker. Okay, as soon as you walk in the branch, there is a personal banker. Okay, whom you can approach for the purpose of, your investment queries or if your deposit queries. Then there is a privileged banker. Okay, there are some clients who are privileged banks. For them, there's a separate section. Then so they're at the branch and they're offering. So then there's a cashier. Then there is a documentation loan officer. Likewise, there are different departments in a retail segment of the bank, where a lot of services are provided for individual consumers, individual bank depositors or borrowers. And at the same time, there is industrial finance division also. Many times, there are industrial finance, like for example, there is also known as wholesale banking department. Wholesale means bulk. Bulk means corporate customers, not retail. So in that case, there are the wholesale banking or the corporate banking division. They have their separate division and requirements. So they have the most important is the RM, which is a relationship manager. Okay, who basically manage the relationship with the company. Let's say, for example, SBI has got RM. That RM will manage the relationship of, let's say, 5 clients. Let's say Bajaj. Okay, then Tata Motors, and let's say another 3 companies. These companies, RM of SBI, will handle their relationship with the bank. So every time the RM will, any requirement Tata Motors has or Bajaj has, they will call the RM. They will say that, please, we are getting export order. You please execute this particular export order for us. Help us in securing the credit. And then the relationship manager will, involve the team members, which is the credit analyst. Credit analyst is the one who prepare the loan appraisal form, get the appraisal form sanctioned, and then the disbursement, and then finally the credit, the security creation. If it involves the security, then mortgage will have to be created. So all this, in the case of the corporate bank, has to be done with the help of relationship manager, which is the single point of contact, SPOC, between the bank and the and the company, especially the companies, there are big companies who every time they cannot call the banking officer. Okay, so for them there is RM. Concept of RM means relationship manager, and almost this is a very highly paid highly paid job. Okay, and highly responsible job also. So if you're a relationship manager of the big company, or of a big bank, then you have a lot of responsibility. Okay, you are handling 5 accounts also. Let's say if you have Bajaj, or let's say, and with Bajaj you have top 3-4 companies also in India, right, or in Pune, then again you'll have a lot of work. Every day some of the other issue is there. Okay, some transaction is not happening. Okay, some bill of exchange is getting stuck, or some LC, the signature is not matching, or something or the other. So for that, the relationship manager has to resolve all the problems and has to provide services which are very, very you can say at sometimes are very demanding. That's why the relationship manager also get high packages, they get high salaries, because their job is also very, you can say, tiresome and cumbersome. Next, after relationship manager, I discuss credit manager, who is basically going to who's going to deal with the credit. Let's say, for example, the creation of the documentation, right? Getting the sanction letter, getting the disbursement done, creating the current account of the company, and then ensuring that all the transactions between the company and its suppliers and the customers are not affected by any kind of a problem, because there could be different problems when it comes to international transactions, cross-border currency. Then you have so many other issues which are there. Sometimes the consignment of, for example, in today's time, the consignments from the China have been stuck, they have been held up, and because of which the companies are having the issues of raw material issues are happening. In this case, again, they have made the payment. Okay, so sometimes all these issues are there which the banks have to resolve. Now, looking at the next concept, after we looked at the corporate and the retail, the third is the treasury department, right? What is the treasury department in the bank? So a lot of money is there in the bank of depositors, right? And this money has to be given as loan. Now, if you get a short-term deposit of 6 months, you can't give a 5-year loan. You can't give a 2-year or 3-year loan out of 6 months, because you don't know, savings deposit customer can come tomorrow also and say that I want the money, right? So you cannot give something, the money which is got by the savings for the purpose of long-term loan, but you can give money by way of fixed deposit for long. So this is known as the asset liability match, ALM department. Okay, the ALM department need to take care of the treasury, what is exactly the money in hand, how much can be lent. Okay, and based on that, every day there's a cost of funds which is there, and that cost of funds is that money which is used by the bank in calculation of the interest rate which is to be charged to the customers for the purpose of earning the net interest income, right? So treasury department is another department which is there. Now this department also has got a responsibility of dealing with foreign exchange. Okay, very complex now, foreign exchange, because a lot of companies, they don't just deal domestic, they have international operations, they have to export, they have to import the goods. So because of the requirements of import and export, then comes the issue of foreign exchange, right? And whenever there is a foreign exchange requirement, either to receive or to pay, the RBI says that you have to take the help of a authorized dealer. Authorized dealer is that which is authorized by the RBI for the purpose of conducting the foreign exchange transaction. And banks are the first such example of authorized dealer, where they are equipped, and they are actually authorized by the RBI to deal in the foreign exchange. For example, let's say anticipating that it is going to be getting an export order, and that export order, let's say, has to be completed in 6 months. For the purpose, the company will be requiring loan. It will approach the bank, okay, and the bank will give the loan, right? When the company sells the goods to the exporter will pay US dollars. Let's say the US dollar has to be converted into rupees. Okay, and again, that conversion rate is going to be that conversion rate after 6 months. If the rate goes down, then will the client suffer? All these things has to be taken care by the bank's treasury department. Okay, the treasury department is there, which also has to deal with the issues like this, right? Now we have looked at the commercial banks, we have looked at the PS banks, we have looked at the specialized banks like agricultural and industrial banks. But let us also understand what are investment banks. Okay, investment banking is a very sought after field or a area where a lot of students are fascinated and they feel that, yeah, I want to know more about investment banking. Who is an investment banker, right? And they have also, for example, you would have seen that in the movie, there's one very popular movie, Zindagi Na Milegi Dobara, in which Hrithik Roshan was actually an investment banker. And when he goes on holiday, again in the holiday also he is talking to clients on the laptop, he's on conference calls, and he's very busy, because this is what is the role of the investment banker, right? First understand what bank. The investment bank is a bank which is actually not a commercial bank. It is not a commercial bank. It doesn't do the function of savings and deposits and loans. It actually manages a large amount. If any company wants to borrow or has a very big requirement, then the investment bank come into the picture. For example, Facebook acquired WhatsApp. Facebook acquired WhatsApp for let's say 19 billion US dollars. Now 19 billion US dollars is something which it is difficult for a single bank to take exposure, right? Or maybe even the 2-3 consortium may find it difficult sometimes. Okay, but then investment banks come in the picture. Okay, it's not just the funding of the $19 billion, it's also structuring of the deal. What is the amount to be paid to the shareholders of the WhatsApp? So this is another question which comes. So these questions, like what is the share swap ratio, what is the amount we have to pay in cash, what is the amount we have to pay after some time, all these are known as the problems which are specific to investment banking, right? And that's why investment banking has emerged as a specific area, like for example mergers and acquisitions, then advisory, large projects are taken, and all those projects are financed with the help of investment banking companies, which are not really commercial banks. For example, to give you a few examples, one of the investment banks in India is SBI Capital. SBI Caps is the investment banking division of SBI. Like international, if you see, you have the JP Morgan, we have Morgan Stanley, and all these are the investment banks which are internationally very well known for the purpose. So again, it depends. Barclays also has got their own investment bank. So there are different types of investment banks, specifically in the US. It was very common over there, mergers and acquisitions and all these high profile transactions which keep happening. For this purpose, we require even for the purpose of venture capital. Venture capital is a type of capital which is required by new companies, right? New companies go for venture capital. So it is that amount, which is another, which is a very big amount. Let's say, for example, let's say Flipkart got $50 million it requires. So it will require funding for that. Now it will require capital funding in the form of equity capital or private equity, what we say, private investors. So then this is an area what is again dealt with by the investment banking. The investment banking is also a third type of banking or bank which provides very high volume services. High volume, when I say the volume is high in terms of the amounts. Now the next is another term which is used in banking is the merchant bank. What is the meaning of a merchant bank? Students are also curious to know what is merchant banking, because merchant navy everyone heard, but what about merchant bank, right? What is merchant banking? Now what is the first you have to understand what is the meaning of the term merchant. Merchant means trader, right? So basically you are indulging in buying and selling. Okay, that is what is a merchant. So merchant bank help in the purpose of the raising the money for initial public offering. Okay, let's say for example one company wants to raise money by way of equity share capital, okay, or by way of debentures. So again you have merchant banks who help in the process of raising the money by way of equity or by way of debentures. Mostly the merchant bank help in case of IPO, which is initial public offering. which is the funds which are raised by the company in the capital market. Okay, so this is another term. Retail banks, we looked at commercial banks, we looked at PSU banks, and now we are looking at the investment and the merchant banks. Right, so these are the 5 prominent classifications of the banks, and mostly I have tried to cover the basic functions which they have and the roles as well over there. Right now, when we talk about, we have also discussed about the RBI, the central bank, which is there. And now when we talk about the regulation, how are the banks regulated in India? So we have to understand that there's an act. Okay, one of the act which is most common is the RBI Act 1934, which regulates the RBI, which has the duties and the powers of the RBI. Then we have the Banking Act 1949. The Banking Regulation Act is there, which is applicable to the banks. Then after that, we have the Negotiable Instruments Act 81, which deals with the negotiable instrument like check, draft, promissory notes, bills of exchange. They have all the different classifications of what is a negotiable instrument. So these are some of the acts which students will have to learn and study if they are interested to know more about the banking, because banking is predominantly a very highly regulated, as I said, it's a very highly regulated area. So you'll have to learn about the different types of laws which are applicable to the banks, especially with regard to the different instruments, with regard to the different deposits, with regards to the different borrowings, and there are so many things which are there in the in the bank which need to be understood. Now coming back to the very important types of non-banking financial companies. Now we have understood banking, but at the same time I would like to take this opportunity to discuss which is something which is very popular these days and has been popular since a long time, which is non-banking financial companies. Okay, now what are the NBFCs? Right, NBFCs are also companies, right, but they are not directly taking deposits from the public. So either they are not, so there are 2 types. One is deposit taking, one is non-deposit. Most of these are non-deposit taking NBFCs. Okay, so they can't issue, give you checkbook facility. They can't give you ATM cards, right? Then they can't serve as payment system like your Paytms and all. So they provide the financial intermediation related to their specific purpose. Okay, for example, there are the one, as I said, first is the NBFC who can accept deposits, and second is NBFC who are not able to accept deposits, right? So the ones who are accepting deposits, again, only for the purpose of their loans or investments, they can accept deposits. Otherwise, they cannot accept deposits. And the ones who are non-deposit taking, they have to issue money. They have to issue the funds by way of debentures. Okay, they have to issue money by way of debentures or some other medium, but they can't take deposits, right? So there are so many types of NBFCs, okay, which are there in India. Then we have the microfinance institutions, who are the small scale financial services providers, financial services who are provide, for example, in India, we have the target of financial inclusion. Financial inclusion means that we have to, the people who are unbanked and the underbanked section, the underprivileged people have to also be included in the formal banking channel. They don't have bank account. So as Dr. Pawar mentioned, they have to be brought under the banking channel. For that, they need to open a Jan Dhan bank account. Okay, they need to open something known as a savings bank account, right? And then the government is able, now today the Indian government is able to deposit money in the hands of the migrant workers who had the account, which is the Jan Dhan account, right? So this facility was opened and many people opened the bank account, and then they got benefit because of the Indian government paid, I think on multiple occasions they have paid, earlier they paid 2,000 rupees in their bank account directly to the needy farmers, right? So how could the government pay the people? Because they have opened an account. Okay, they have opened an account under the name of the Jan Dhan or even the Manrega, the Mahatma Gandhi rural urban mission. Okay, they have also opened under employment guarantee accounts. So they have opened their accounts, and now they are able to get the money directly deposited in their bank account. So this is where the financial services are provided to low income household and enterprises. Then we have risk management functions in the bank, because banks are also exposed to risk, right? So one is a credit risk. Credit risk means that the borrower defaults. Then what happens? Then the bank has no choice, but it has to liquidate the security which is created, or the security which is charged in favor of the bank. Then there's a liquidity risk. Liquidity risk means the money available is not there. So that is a liquidity risk. Okay, sometimes the flow of money become very less in the banking channel. Then third is the market risk, right? Risk of the interest rates, risk of the exchange rates. These are market risk, operational risk, and system risk. So all these are the risk also in the banking, which has to be dealt. So there's a risk management department in every bank, okay, which is technologically driven, and which has got risk based bank audit and supervision and supportive legal environment. So this is the different structure of the bank, and also the different departments of the bank. So I proceed with this to the next part, okay, which are the different authorities, which are the different institutions, which are the government institution. But for example, the first government institution is the SIDBI. SIDBI means Small Industrial Development Bank of India. Okay. Now, for the purpose of development of small industry, the government created a specified body which is known as SIDBI, okay, which has the sole purpose of helping the small industries to grow. Okay, and for this purpose, SIDBI was created so that they get specific attention related to their problems, to their subsidies, to their incentive schemes, to their manufacturing, enhancing their manufacturing capabilities, and various other factors, right? So for the purpose of this, the government also created training centers. The government also, provided a lot of credit support to these kind of institutes, which then help the small industries to gain advantage and try to become large company one day. Okay, because a small company someday it should also be able to look forward to becoming a large company. Otherwise, the credit growth, otherwise the industrial growth will be hampered. So this is one important area which is there in the in the banking, is that the government itself has created a lot of bodies, okay, for the purpose of ensuring that various sectors, industrial and agriculture, are given a boost and they are not ignored. Okay. So we look at the non-fund based scheme. We have looked at the fund-based loans, like the working capital loan and the and the packing credit and export pre-shipment, post-shipment funding. Now there are some certain other facilities which are also known as non-fund. Now what is non-fund? Okay, so for example, the bank also provides guarantees. Okay, bank says that I guarantee that this borrower will pay the money on time. Okay, so guarantee is the bank giving any money in the guarantee? No, the bank is not giving any money in the there's no involvement of funds, there's no involvement of money, there's no question of interest, right? Because there is no money involved. But then guarantee is involved. Guarantee means what? That the borrower will honor the commitment. So this is a non-fund liability. If the borrower doesn't, then the bank guarantee can be invoked, right? So the borrowers also need non-fund facilities, especially when they are going to import something where the foreign exporter doesn't know the importer, and in such case the bank guarantees are very useful for the purpose of raising money. A bank guarantee, very important, is a guarantee issued by the banker, okay, in case of a non-occurrence or occurrence of particular event, okay, which makes it riskier for the other party, right? So in such case the bank guarantee are there. So that is a non-fund based facility where there is no money which is involved. Now one instrument which is very important is a letter of credit, okay, LC. Letter of credit is another very important, which is actually not a outflow of money, but very important for the purpose of international trade and international funding. What is a letter of credit and how it is helpful? Okay, so basically, if let's say I am an importer, okay, and I sorry, I'm an exporter, right? And I want to export the goods to another foreign, let's say African country. Now I don't know who is going to buy, whether he's going to pay or not. So I am at a risk, and because of this risk, I may not be, confident that I will receive my money. So what to do in such case? In such case, I tell my bank that please get me a comfort. Okay, that if this importer doesn't pay, then you will give me, or the importer's bank will give us the money, because I cannot take the risk. I don't know the importer. So what happens? My bank and the importer's bank, they deal with the help of an instrument known as a letter of credit. Letter of credit is nothing but it's another instrument or a type of a facility which gives comfort to the exporter that the money will be paid by the importer. If importer doesn't pay, then importer's bank will honor the commitment of payment. Okay, that is another very important instrument which is there. Now LC can be either short term or long term, depending on whether you are going to buy the raw materials or whether you are going to purchase the machinery, import the machinery, or you're going to import something like a capital goods. Okay, so that again is a letter of credit. That's a basically very important, you can say, trade finance, which comes under trade finance. So we have looked at the different types of instruments. We have looked at the different types of services. Okay, we have looked at the different types of careers in the bank. Now, what also looked at the RBI. We have looked at the different aspects, what RBI considers, what are the different types of reserve ratios and all. Now, very important is the principle of credit, okay, on which the entire banking system works. What is the principle of credit? So there are different principles. So if suppose, for example, if you approach to the bank for a loan, what is the bank going to see? Okay, the bank is going to see the 4 things, okay, or rather we call it the 5 C's of the credit. First is the capital. How much capital the borrower is going to contribute in a particular project. That is first thing. If I'm putting, the bank is putting 60%, then the borrower must get 40%. Okay, or if I'm putting 70%, the borrower must get 30%. So there has to be some commitment which is to be shown by the borrower. It cannot be that you cannot take 100% from the bank. You have to show some commitment from the company side. Second is the collateral. Second C, one is the capital, 2 is collateral. Collateral means what kind of security are you going to provide? If the company is not able to pay the loan, what is the amount of security which is going to be there, right? And this is one of the very important determinant of the loan process, the collateral. Third is capacity, right? Whether there is the capacity to pay, is the scale of operations good enough to support your loan amount? The next is the capacity. Fourth is character. What is the character of the borrower? Is the borrower having a very bad credit history? All these are considered. So basically, suppose if the borrower is like in the case of Vijay Mallya, we all know he has become quite known for the for the defaulting of the loan. So the character is very important as far as the bank payment guarantee is concerned. And last is the conditions. What are the conditions in which the business operates? Okay, these are the 5 C's which help in the in the selection of the borrower. These are the 5 C's of the credit. I repeat, one is the capital, second is the collateral, third is the capacity, fourth is the character, and fifth is the conditions. Right? These are the 5 C's. Now we will look at the different elements to be considered by the banker in granting the loans. So first guiding principle of sound lending is safety. Okay, you cannot ignore the safety of the depositors' money. You have to keep the depositors' money. Safety should never be compromised or sacrificed for the purpose of profitability. Okay, although bank exists for the purpose of making profit, but there has to be proper safety first, and then comes the other things. A failure of a single loan can affect the bank position of the bank. What happened in case of Yes Bank? Yes Bank had large exposure to the Vadhavan Group, HDIL, Housing Development Infrastructure Limited. That Vadhavan Group was having a large exposure, so it was all the between the Yes Bank CEO Rana Kapoor and his affiliates. In between them, there was a lot of money which was diverted, and there was a risk of being lost, and finally the money was at stake. So this is the first important principle of the in the banking is safety. Second is the liquidity. Okay, liquidity means if depositor comes and says, I want I want to withdraw the funds. In that case, there must be enough liquidity, or the money should be available, which the bank can repay. You cannot say that no, I have given all the money to for borrowing, or to the borrowers, and I cannot. You cannot say that, because depositors can come anytime, right? So you have to ensure that the bank's deposits which are repayable on demand or at short notice are repaid, okay, promptly, right? And then the third is purpose. Okay, purpose means what is the purpose you are taking the loan. Okay, what is the purpose? Are you taking the loan for genuine purpose, or are you going to be using that money for some trading or speculative purposes which are not related to your business activity? So again, this is a very important aspect of granting the loan. The purpose should not be sacrificed. If suppose the money has been taken for, let's say, exports, then you must do the useful. You have to use the money for the purpose of export. You can't use the money for investment in shares. Okay, that is very important, the purpose, right? Now, you also need to look at how the security is created. What are the different forms of security creation? Okay, so the first is, security can be created. I told you earlier, if it is movable goods, it is pledge or hypothecation. If it is immovable goods, then it is security is created by way of mortgage. Okay, now what is pledge? Okay, pledge is for example, a person takes a loan against jewelry, gold. Okay, he gives the jewelry to the bank or to the company like Muthoot or Manappuram Finance. So what has happened? The jewelry has been provided, has been delivered or given to the bank. Okay, it is known as pledge. I pledge my jewelry with the bank for the purpose of loan. Okay, so in this, let's say take the case of food grain, a trader of food grains, right? He hand over the keys of the warehouse to the to the bank. Means I'm giving you the keys of my warehouse. You keep the entire stock of food grains, but I want some overdraft, right? So in this case, I'm pledging my food grains. In the previous case, I'm pledging my gold, right? So what is happening is only movable property can be pledged. Can I pledge land? No. Can I pledge building? No. Land or building cannot be pledged. They have to be mortgaged, right? So this is very important. Under the pledge, ownership remains with the borrower, but possession given to the bank. I give you the keys, but you don't become the owner of the food grain. I give you the gold, but you don't become the owner of the gold. Only giving you the gold for the purpose of loan. The moment I repay you the loan, you have to give the gold back. Okay, so this is very important concept of the pledge, right? Now the next is hypothecation. What is hypothecation? In the case of hypothecation, it's another type of charge. In Hindi, we call it girvi. Okay, so in the case of hypothecation, asset continues to be in the possession of the borrower, which means, again, in the case of hypothecation, it's going to be there with the borrower only, right? It only gives the bank the right to take possession and sell in case of default. So I don't need to, give the keys to the bank. Keys will remain with me, but it will be hypothecated. Hypothecated means bank can sell the food grains if I am not able to pay the loan on time. This is what is the hypothecation. Then the third is mortgage. Okay, movable assets are pledged or hypothecated, whereas immovable properties are mortgaged. Now, what are the immovable properties? Land and building. Okay, so these are not, you cannot give land. You have to mortgage it. Mortgage means there has to be an agreement. Okay, and this agreement gives the title to the bank if you default. So in case of default by Vijay Mallya, they have taken over the properties of Vijay Mallya, which were there in India. Kingfisher had a lot of properties, which has already been taken over by SBI. Okay, because SBI, the mortgage had been created in the favor of the banker. Okay, so these are the different things which are there, which are in the banking system, right, and which are very important for the students. So in today's session, I hope that I have done justice to the topic which has been assigned to me, which is banking, the meaning and the functions and their importance in today's times. So it is my suggestion to the students that if you are planning for a career in banking, it is a very exciting field, and it involves a lot of learning, and also even an entire life is less. To even if you work in the bank, you can just be in one department. Okay, you will only gain exposure and understanding of that department. Let's say, for example, foreign exchange, then you will it's very less, even the entire 20-30 years of your working, you will not be able to get a full exposure of the entire ocean of banking services which exists, right? So if you're looking at banking as a career option, then you must ensure that you prepare in the right manner, you approach the right institutes, and you gain the right skills, as Dr. Pawar mentioned in the morning address. The right skills are very important, which will help, because knowledge everyone has, but the skills is not what everyone has. Okay, skillful are the ones who are going to be beating the competition in the next century. So with that comment, I would like to wish you all the best for your studies as well as your careers, and hopefully you should, if you try properly, you should be able to achieve success in this particular field, which is banking. Thank you for listening patiently, and once again I wish you all the best.